Based on the historical data and forecast, Bitcoin shows an overall upward trend, consistently hitting new highs. The support price is stable at $115,100, while the resistance price is $119,300. The RSI has been fluctuating, recently crossing above 50, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $116,600, coinciding with the initial forecast price. A stop-loss order will be placed at $115,100, just below the established support level, to limit potential losses. The target price will be set at $119,000, aligning with the forecast price and providing a comfortable profit margin. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, we will consider an additional entry point at $115,500, with the same stop-loss at $115,100 and a revised target price of $118,600. Conversely, if the price touches the upper Bollinger Band, we will consider taking profits at $117,200. This layered approach allows us to capitalize on both momentum and volatility, maximizing potential returns while mitigating risk. The portfolio will prioritize the long position strategy with adjustments based on RSI and Bollinger Band signals for optimized performance. Based on the historical data and forecast, Ethereum shows a generally upward trend with some volatility. The support price consistently remains at 4,300, while the resistance fluctuates around 4,660. The RSI indicates periods of both overbought and oversold conditions, with recent values trending upward. The Bollinger Bands show that the price is currently near the upper band, suggesting potential for a pullback. Therefore, I recommend a long position strategy with an entry price of $4,640. To manage risk, set a stop-loss at $4,590, just below the recent low. The initial target price should be $4,700, aligning with the previous resistance level. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, oversold, initiate a long position. When the RSI exceeds 70, overbought, consider taking profits or tightening the stop-loss. Additionally, if the price touches the lower Bollinger Band, it's a strong indication of a potential reversal and a good entry point. If the price breaks above the upper Bollinger Band, it suggests continued upward momentum. For this specific scenario, with the forecast price around $4,640 and the RSI trending upwards, a long position with an entry price of $4,640, a stop-loss at $4,590, and a target price of $4,660 is a reasonable approach. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations. The RSI consistently remains between 43.6 and 60.9, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering this, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $2.88. The stop-loss will be set at $2.78 to protect against potential downturns. The initial target price will be $3.12, aligning with the recent resistance level. To further refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the price retraces to $2.88 and the RSI dips below 40, it signals an oversold condition, providing a strong entry point. We'll maintain the $2.78 stop-loss. If the price breaks above the upper Bollinger Band, which is currently around $3.18, it's a strong indication of further upward momentum, and we'll adjust the target price to $3.2. This combined strategy balances risk and reward, capitalizing on the current upward trend while incorporating technical indicators for enhanced precision. Based on the historical data and forecast, BNB exhibits a strong uptrend. The price has consistently made higher highs and higher lows, supported by the Bollinger Bands trending upwards. The RSI has been fluctuating, but generally trending upwards as well, indicating strengthening momentum. Considering the current price of $982 and the forecast predicting prices reaching $1,050, I recommend a long position. We will enter a long position at $982. Given the support level at $925, we will set a stop loss at $925 to limit potential losses. The target price will be $1,050, anticipating the forecasted price movement. To enhance the strategy, we will incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, we will consider entering a long position. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider taking profits or reducing our position. The Bollinger Bands will act as dynamic support and resistance levels. When the price touches the lower band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. This combined approach, leveraging historical trends, forecasts, RSI, and Bollinger Bands, aims to maximize returns while effectively managing risk. Based on the historical data and forecast, Solana shows a strong uptrend. The price has consistently been moving upward, breaking through resistance levels and showing bullish momentum. The forecast for the next week predicts continued price increases, reaching $265. Considering the RSI values, which have been generally above 50 and nearing 70, the asset is approaching overbought territory, but not yet significantly so. The Bollinger Bands are widening, indicating increased volatility and potential for further price movement. Therefore, I recommend a bullish strategy focusing on capitalizing on the upward trend. My proposed strategy involves entering a long position at $247, coinciding with the recent high. To manage risk, set a stop loss at $242, just below the recent support. For the target price, I suggest $265, aligning with the weekly forecast. This strategy combines the momentum of the uptrend, the support of the recent high, and the bullish forecast to maximize potential returns while mitigating downside risk. This approach balances the potential for high gains with a defined stop loss to protect capital. Based on the historical data and forecast, Dogecoin shows an upward trend with consistent price increases over the past 2 weeks. The RSI consistently remained above 50, indicating a bullish momentum, and recently approached the overbought level of 80. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The forecast data projects continued upward movement, with prices expected to reach $0.299. Therefore, I recommend a long position strategy focusing on capitalizing on this bullish trend. Our strategy will be a combination of RSI and Bollinger Band signals. We will enter a long position at $0.285 on September 19, 2025, when the forecast price is released. The stop loss will be set at $0.279, just below the recent support level and the lower Bollinger Band to protect against unexpected downturns. The initial target price will be $0.297, aligning with the forecast high for September 22, 2025. If the price reaches $0.297, we will move the stop loss to the entry price of $0.285 to secure profits and further capitalize on the upward momentum. This combined approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Cardano exhibits an overall upward trend, consistently nearing the resistance level of $0.929. The RSI values have generally been above 50, indicating bullish momentum, with recent values fluctuating between 54 and 63. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for further price movement. Considering the forecast predicting prices above $0.93, I recommend a long position strategy. Specifically, I suggest entering a long position at $0.932. The stop loss should be set just below the support level at $0.802 to protect against a potential downturn. The initial target price should be the recent resistance level of $0.929, aiming for a quick profit. To maximize potential returns, I propose a second strategy leveraging the RSI and Bollinger Bands. When the RSI dips below 30, indicating an oversold condition, enter a long position. For instance, if the RSI reaches 28, enter at $0.802. Set a stop loss at $0.77, below the lower Bollinger Band. The target price for this strategy should be $0.929. Combining both strategies, the primary strategy focuses on the upward trend, while the secondary strategy capitalizes on short-term dips. This blended approach provides a balanced and potentially high-return investment portfolio for Cardano. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within the range of $0.331 to $0.352. The RSI indicates that TRON is currently in a neutral range, with values fluctuating between 32.3 and 58.7. The Bollinger Bands suggest that the price is approaching the upper band, indicating potential overbought conditions. Considering these factors, I recommend a long position with an entry price of $0.35. A stop loss should be placed at $0.348, just below the support level, to limit potential losses. The initial target price should be $0.359, near the upper Bollinger Band and slightly above the recent resistance. To refine the strategy, I'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, a long position can be initiated with an entry price of $0.322. The stop loss for this oversold entry would be $0.317, below the lower Bollinger Band. The target price would be $0.357, aligning with the upper Bollinger Band. Conversely, if the RSI exceeds 80, indicating an overbought condition, consider exiting the existing long position or initiating a short position. The combined strategy prioritizes the upward trend while utilizing RSI and Bollinger Bands for more precise entry and exit points, aiming for high returns. Based on the historical data and forecast, Chainlink shows an overall upward trend, supported by consistently breaching the resistance price of $24.9. The RSI indicates that the asset is approaching overbought territory, with values fluctuating above $50, suggesting potential for a pullback. However, the forecast prices predict continued growth, reaching $25.9. Combining these factors, I propose a long position strategy. We will enter a long position at $24.8, leveraging the predicted upward movement. A stop-loss order will be placed at $23.5, coinciding with the established support level, to mitigate potential losses. The initial target price is set at $25.7, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $21.7, which indicates an oversold condition, we will enter a long position at $21.7. The stop loss will be set at $21, just below the lower band, and the target price will be $25.7, aiming to capitalize on the expected rebound. This combined approach, utilizing both RSI and Bollinger Bands, aims to maximize potential returns while effectively managing risk. The final portfolio will prioritize the long position at $24.8 with a stop loss at $23.5 and a target price of $25.7, as this aligns with the overall trend and provides a more conservative yet profitable entry point. Based on the historical data and forecast, Wrapped Beacon ETH has shown a strong upward trend from September 5, 2025, to September 18, 2025, with the price increasing from $4,630 to $4,950. The RSI consistently remained below 80, indicating that the asset is not currently overbought. The forecast for September 19, 2025, to September 25, 2025, suggests a slight pullback before resuming the upward trajectory. Considering the support price of $4,630 and the recent upward movement, I recommend a long position with an entry price of $4,970. A stop loss should be placed just below the support level at $4,630 to mitigate potential losses. The initial target price should be set at $5,040, aligning with the forecast for September 25, 2025. To refine this strategy, we incorporate the Bollinger Bands. The price has recently approached the upper band, suggesting a potential pullback. Therefore, we'll implement a dynamic trailing stop loss. If the price reaches $5,040, we'll move the stop loss to $4,850. If the price continues to rise, we'll adjust the stop loss further, maintaining a buffer of at least $100 below the current price. The ultimate target price will be $5,080, based on the historical high and the overall bullish trend. This combined strategy leverages the upward momentum while incorporating risk management through dynamic stop loss adjustments, maximizing potential returns while minimizing downside risk. Based on the historical data and forecast, Polkadot exhibits a clear upward trend. The price has been consistently rising from $3.83 to $4.55, with recent days showing strong momentum. The forecast for the next week projects further gains, reaching up to $4.75. The RSI values have mostly been above 50, indicating bullish sentiment, and have approached the overbought level of 80, suggesting a potential pullback but also confirming strength. Considering the Bollinger Bands, the price has been fluctuating within the bands, but recently moved above the upper band, signaling a strong upward movement. Therefore, I recommend a long position strategy. My strategy will be a combination of RSI and Bollinger Band signals. We will enter a long position at $4.47, coinciding with the first day of the forecast. The stop loss will be set at $4.38, slightly below the recent support level and the lower Bollinger Band to protect against potential pullbacks. The initial target price will be $4.75, aligning with the forecast high. If the price reaches $4.75, we will adjust the stop loss to $4.6 to secure profits and potentially target $4.95, the resistance level. This strategy combines the momentum of the upward trend, the RSI signal, and the Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SAY exhibits an overall upward trend, consistently testing and breaching the resistance level of $0.344. The RSI values fluctuate, but generally remain above the oversold level of 20, indicating bullish momentum. The Bollinger Bands show that the price has been approaching the upper band recently, suggesting potential for further upward movement. Therefore, I propose a long position strategy. I recommend entering a long position at $0.338 on September 19, 2025. Given the recent price action and the proximity to the upper Bollinger Band, a stop-loss order should be placed slightly below the support level at $0.31 to limit potential losses. The target price should be set at $0.351, aligning with the forecast price on September 25, 2025, and providing a reasonable profit margin. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider entering a long position at the prevailing price, with a stop loss at $0.275 and a target price of $0.35. Conversely, if the price touches the lower Bollinger Band, it could be a buying opportunity with a stop loss at $0.275 and a target price of $0.351. Combining these signals, the most efficient portfolio would be to enter a long position at $0.338 on September 19, 2025, with a stop loss at $0.31 and a target price of $0.351, capitalizing on the upward trend and forecast data. Based on the historical data and forecast, dYdX shows an overall upward trend, consistently testing and breaking through resistance levels. The RSI fluctuates between 47 and 60, indicating periods of neither extreme oversold nor overbought conditions, but generally trending upwards. The Bollinger Bands show that the price has been oscillating within the bands, with recent movement towards the upper band, suggesting bullish momentum. Considering the support at $0.664 and the forecast prices trending upwards, I propose a long-term investment strategy. I recommend entering a long position at $0.675, coinciding with the first forecast price and recent upward movement. A stop loss should be placed at $0.664, just below the established support level, to protect against potential downturns. The initial target price is set at $0.708, aligning with the forecast price for September 21, 2025. As the price approaches this target, we should reassess the situation and potentially adjust the target price upwards based on further technical analysis and market conditions. This strategy combines the upward trend, RSI readings, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, EIGEN Cloud, Prev Eigenlayer, shows a clear upward trend with consistent price increases over the past 2 weeks, supported by the forecast predicting further growth. The RSI values mostly hover above 50, indicating a bullish momentum, and the price has recently approached the resistance level of $2.17. Considering these factors, I recommend a long position strategy. We will enter a long position at $1.77, placing a stop-loss order at $1.74, just below the support level, to mitigate potential losses if the trend reverses. The initial target price will be $1.86, aligning with the upper Bollinger Band and a reasonable profit margin. To maximize returns, we will implement a dynamic target price strategy. As the price reaches $1.86, we will move the stop-loss order to break even, protecting the initial investment. If the price continues to rise, we will adjust the target price to $2.04, based on the final forecast price. This strategy combines RSI signals, Bollinger Band analysis, and support/resistance levels to capitalize on the bullish trend while managing risk effectively. The portfolio will be 60% long position, 20% cash, and 20% reserve. Based on the historical data and forecast, Curve DAO demonstrates a fluctuating trend with periods of consolidation and upward movement. The RSI consistently hovers around the 40 to 50 range, indicating neutral to slightly bullish momentum. The Bollinger Bands show volatility, with the price occasionally touching the upper and lower bands. Considering these factors, I propose a combined strategy focusing on short-term opportunities. We will initiate a long position at $0.777, coinciding with a slight dip and the lower Bollinger Band touch. The stop-loss will be set at $0.748, just below the recent support level, to protect against unexpected declines. The initial target price will be $0.802, aligning with the forecast price and the middle Bollinger Band. To maximize potential gains, we will implement a dynamic target strategy. If the price reaches $0.802, we will move the stop-loss to break even to secure profits. Subsequently, we will set a second target price at $0.843, near the recent resistance level. If the price fails to reach the second target within a reasonable timeframe, we will close the position. This approach balances risk and reward, capitalizing on short-term trends while mitigating potential losses. This portfolio is the most efficient of the 3 strategies. Based on the historical data and forecast, Pudgy Penguins shows a clear upward trend. The price has been consistently approaching the resistance level of $0.0402 and the forecast indicates a continued upward trajectory, reaching $0.0393 by September 25, 2025. The RSI values have been fluctuating but generally above 50, suggesting a bullish momentum. Considering the Bollinger Bands, the price is currently near the upper band, indicating a potential for a pullback, but the overall trend remains positive. I recommend a long position with an entry price of $0.0364. To manage risk, set a stop-loss at $0.0331, just below the recent low and within the lower Bollinger Band. For the target price, I suggest $0.0382, aligning with the forecast high and a reasonable profit margin. To refine this strategy, we'll incorporate an RSI-based trigger. If the RSI drops below 40, consider averaging down the position to $0.0347 with a revised stop-loss at $0.0326. Conversely, if the RSI reaches 80, consider taking partial profits at $0.0375. This adaptive approach combines trend following with momentum indicators to maximize returns while mitigating downside risk. The final portfolio will be a long position with an initial entry at $0.0364, a stop-loss at $0.0331, and a target price of $0.0382, with adjustments based on RSI signals for enhanced risk management and profit optimization. Based on the historical data and forecast, Avalanche exhibits a strong uptrend. The price has consistently moved upward, supported by increasing RSI values and expanding Bollinger Bands. The forecast for the next week projects continued upward momentum, with prices reaching $38.2. Considering the RSI, we have observed values consistently above 50, indicating a bullish sentiment. We will implement a strategy focusing on capitalizing on this trend. Our strategy will involve a combination of RSI and Bollinger Band signals. We will enter a long position at $32.9 when the forecast begins. The stop loss will be set at $31.8, just below the recent low, to mitigate potential losses. The initial target price will be $35.7, aligning with the forecast and the upper Bollinger Band. If the price reaches $35.7, we will adjust the stop loss to $33.9 and extend the target price to $38.2, capturing further potential gains. This approach balances risk and reward, aiming for high returns while protecting capital. Based on the historical data and forecast, Near Protocol demonstrates a clear upward trend, supported by consistently breaking through resistance levels and the projected price increase over the next week. The RSI consistently stays above 50, indicating bullish momentum, and the Bollinger Bands show the price moving towards the upper band, further confirming the uptrend. My strategy will be a combination of RSI and Bollinger Bands, with a slight emphasis on the upward trend. I recommend a long position with an entry price of $2.94. Place a stop-loss order at $2.75 to mitigate potential losses if the trend reverses. The initial target price should be $3.32, aligning with the forecast for September 25, 2025. To refine this strategy, I will implement a dynamic target price adjustment based on the RSI. If the RSI reaches 80, indicating overbought conditions, consider taking partial profits at $3.32 and moving the stop-loss to break even. This will secure gains while allowing the position to continue benefiting from further upward movement. If the price approaches the lower Bollinger Band, consider a smaller long position with an entry price of $2.26, a stop-loss at $2.16, and a target price of $2.73. This combined approach balances risk and reward, capitalizing on both the established upward trend and potential pullbacks. Based on the historical data and forecast, Immutable shows a strong uptrend. The price has consistently moved upward, breaking through resistance levels. The RSI indicates that the asset is nearing overbought territory, with values consistently above 70 in recent days, suggesting a potential pullback is possible. However, the forecast data indicates continued upward momentum, with prices expected to reach $0.934. Considering the current trend and the forecast, I recommend a long position strategy. We will enter a long position at $0.771, placing a stop-loss order at $0.747 to protect against a potential downside correction. The initial target price will be $0.832, aligning with the support level. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been trending above the upper band for several days, indicating strong momentum. If the price breaks below the upper band and the RSI falls below 80, consider taking profits at $0.832. If the price continues to rise and stays above the upper band, we can increase the target price to $0.884, the resistance level. This combined strategy leverages both RSI and Bollinger Bands to maximize potential gains while mitigating risk. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Wormhole exhibits a strong upward trend. The price has consistently risen from $0.078 to $0.122, with the forecast predicting further increases to $0.128. The RSI consistently above 50 indicates a bullish momentum, and the price has frequently touched the upper Bollinger Band, confirming the upward trajectory. Therefore, a long-term investment strategy focusing on capitalizing on this upward trend is recommended. We will implement a layered entry strategy, buying 20% of our position at $0.105, 30% at $0.11, and the remaining 50% at $0.111. The stop loss will be set at $0.108, just below the support level, to protect against potential pullbacks. The initial target price will be $0.122, coinciding with the recent high, with a secondary target of $0.128 based on the forecast. To refine the strategy, we will incorporate the Bollinger Bands for dynamic adjustments. If the price breaks above the upper Bollinger Band, indicating a strong bullish signal, we will consider raising the target price to $0.13. Conversely, if the price approaches the lower Bollinger Band, we will tighten the stop loss to $0.107. This adaptive approach, combined with the RSI-based entry points and layered buying, aims to maximize returns while mitigating risk. The overall portfolio will allocate 60% to the layered entry strategy and 40% to the Bollinger Band's adaptive adjustments, creating a balance between consistent gains and opportunistic enhancements.